everybody. Welcome to the Fundamental Analysis webinar with AvaTrade. My name is Troy. I'll be presenting this evening. Before we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Thank you. Looks like we're up and running fine. A couple driving stories today, really fundamentally. It's not too complicated. We'll take a quick look at that, and then we'll get on the live charts to look for some examples of potential strategies you might be interested in using. Keep in mind, as always, all investments have risk. No one trade is guaranteed to bring profits. With that said, each and every trade that you take does have a good potential for profits, which is why we're all here, to go after those potential profits in the best way we can figure. When using AvaProtect, it's a unique way to manage risk. That's something that you could use as part of your risk management strategy. Now, you obviously, along with that, could use stop loss marks, which are a pretty standard thing when trading. You also could use potential hedge positions. So there are different ways to manage that risk, and there's no reason why you can't do so in a way that makes sense for you. Now, one thing that you want to keep in mind about fundamental analysis is that there are a couple different types of fundamental news that can affect the charts and the movement of the prices on them in any given day. And so one type of fundamental news would be what we call regular economic events. And we'll take a look at that today. The big one were the CPI numbers out of the US, the Consumer Pricing Index, which gives us an idea of about inflation in terms of whether inflation is greater than expected, less than expected, or as expected. And so that was part of the big driving news that came out today, was from a regular economic event out of the US that's scheduled on an economic schedule. So we know exactly when that type of news will come out. We know what to look for, and in general, based on the news that comes, you have a pretty good idea of which way the markets will go, typically. And then the other type of fundamental news is what we call extraordinary economic news. And there's an example of that today as well, a headline breaking out of China that they have double the cases of the new Delta variant. It seems to be spreading rapidly in China. And since China is a very large economy in the world, that's created some fear on the markets as well. And so those two stories we'll take a look at. They're really the driving information fundamentally today so far. And then we'll get on the charts to take a look at some potential opportunities. Natalie, yeah, non-farm payrolls, we would consider that a regular economic event because we know exactly when it will be. We know what effect it will have if it's better than expected news or worse than expected news. So yeah, that's a scheduled event. We know of it in advance. We know exactly what the numbers will be about. So that falls into the category of regular economic event. Okay, good question. So let's go ahead and take a look then at some of the driving headlines that came out. This, Wall Street slips as tax uncertainty outweighs easing inflation worries. This is a third story that came out today as well, and it's starting to move the market also in a negative fashion in terms of the stocks and indices. So the CPI numbers came out, and maybe we'll take a look at that first. The CPI numbers were here, and so Consumer Pricing Index came out lower than expected, and really we're focusing on the core CPI. That's the 3-star, the high volatility expected announcement. It has the largest effect, the core CPI numbers, and they were lower than expected. So 0.1 on the inflationary number there instead of 0.3% increase. And at first that was viewed as positive, even though it's in red as a negative number, usually, if the prices are rising more than expected, that's a sign of demand in the economy, a sign of a healthy economy. And if prices are rising less than expected, that's a sign of less demand and a weaker economy. But as we've been living in bizarro world the past year and a half with the COVID crisis, because of all of the stimulus measures that are out there, negative news, Wall Street is viewing as positive, and that causes the Wall Street to go up, stocks to go up, indices to go up. And let's undress that statement a little bit. Why would negative economic news, lower than expected CPI numbers, why would Wall Street react positively to that? And the answer is because Wall Street's worried that stimulus measures will be cut, especially out of the US. And so if the economy's doing too good, there's fear that, the US will cut back on stimulus measures. And since the numbers came in worse than expected, well, then the markets reacted positively, saying, the US won't cut stimulus so soon because the numbers didn't show too much inflation. And so that was the initial response today. The inflationary numbers, the core CPI came in lower than expected, which looks like bad news, but actually the reaction was positive on Wall Street. But then this headline came about tax uncertainty in the US. And what that goes into is the stimulus measures that there's a stimulus package that the Democrats are trying to pass in the US. And part of that, they want to include an increase in the corporate tax rate, basically undoing the decrease in corporate taxes that Trump instituted when he was president. And so there's worry that with the CPI numbers coming in lower than expected, meaning the economy's not roaring as much as expected, and now there's talk about increasing the corporate tax rate in the US, that created a lot of fear, and up went the volatility index and down went the stock market. Okay, so kind of flip movements. One, reactionary CPI numbers were worse than expected, relieving the fear that inflation was too high, and up went Wall Street. Then the fear about, the Democrats are wanting to raise corporate taxes, down goes Wall Street. Okay, opposing headlines. And then what we look at here, COVID-19 cases in Southeast China more than double as Delta variant spreads. I alluded to that earlier. That's negative sentiment right there, along with the negative sentiment about possible corporate taxes being raised in the US if the Democrats have their way. And they control the House, they control the presidency, and they're not far off from controlling the Senate. And so with a couple swing votes, they certainly could pass tax reform, increasing taxes back up on corporations in the US. So with this COVID-19 outbreak spreading and getting worse in China, fear about increased taxes, and really signs that the economy is not roaring as much as expected with those lower than expected CPI numbers, we can see that there's overall negative sentiment on the market right now. Okay, so how can we first utilize proper risk management as we go after potential profits in this type of environment? One would be, as I mentioned, to use AvaProtect. AvaProtect protects against losses for a small premium cost. You can use AvaProtect by downloading AvaTrade Go onto your mobile device. That's one way to use AvaProtect. AvaTrade Go has lots of nice features to help you manage risk. If you program the take profit or the stop loss, it calculates your potential profit and your potential loss for you before you ever place your trade. AvaProtect is an option that caps your loss for the protected time period at the cost of the premium, and your potential profit can be much larger than the cost of the premium, which is the idea there, to have a low cost on protection and a much higher potential profit for defined time periods. And if you log in from our main website here, you'll be in what's called our web trader platform, which also has AvaProtect and those features in the order window for calculating your potential profit, your potential loss, etc. We can take a quick look at, I don't know, something like gold. It's usually the example I use. It's a popular instrument to trade on. And if you bring up an instrument very easily by using the search tool, you can then, within the order window, buy or sell on the instrument. Doesn't matter which direction you're going, you have the opportunity to use AvaProtect. So we see the order window pop up for gold. Whether I'm buying or selling, I can use AvaProtect, a small premium cost, to protect against losses on that trade. And so it's a flat cost. I can protect it by the hour. I can protect it by multiple hours, by days. The max here is 2 days of protection. So if you expect a really large movement, your protection cost for that couple days or for even smaller time periods is relatively small compared to the potential profit you could have on that instrument. And then if you're programming the take profit or the stop loss, it calculates your potential profit and your potential loss for you. Okay, you put in the stop loss and take profit prices, it calculates those for you in your account currency. So makes it very simple to risk manage by using these key features on AvaTrade Go or on our web trader platform. And since we're talking about fundamental analysis, if we take a look, there are some premium services available on our web trader platform from Trading Central. And in addition to the basic economic calendar, we also have some advanced features here. One would be Market Buzz, which directly relates to fundamental news. If you're trading on different instruments that you see pop up here in the bubble, then you click on it. It gives you the fundamental analysis that goes along with that instrument. You click on the articles, they're timestamped in the most recent, and it takes you to the website. You can read about that. In this case, it's a particular stock. And you can read the most recent news that our system has found on that instrument. So it does the fundamental analysis for you for different stocks, indices, etc. Good question. The question is the webinar emailed out at the end? It isn't emailed, but it is recorded. And you can go to our YouTube channel, and in the English webinar section, you'll find this webinar uploaded by tomorrow afternoon, typically at the latest, probably tomorrow morning. Okay, sometimes even same day, the recordings are uploaded, so you can look at them, and you can look back at the past weeks and months of webinars, not just mine, but others, and get an idea of strategies that are used. Even if the movements aren't relevant in terms of the price that they're at, if you're looking at an old webinar, the concepts are still relevant, the strategies that are taught. So you can go through and get lots of repetition on different strategies and concepts that have been used. Now, why don't we go ahead and jump on the MT4 platform? Because I know there are a lot of folks out there that have been using the MetaTrader MT4, MT5 platforms, and we offer all of those options along with our web trader and AvaTrade Go platforms, which are a bit more advanced in terms of risk management and different features that are offered on it. But we'll go with the MT4 platform here to do a bit of technical analysis to go along with our fundamental news that we just went over. So if we take a look then at some instruments that are being affected by the news today, like gold, okay? Why did gold go rushing up so rapidly today? This was right after the CPI numbers came out. Okay, we're looking at 1 hour candles. We go back, gold really went rushing up after the CPI numbers. Why did that happen? Well, gold is a safe haven against inflation. And even though the CPI numbers showed lower than expected inflation, that actually increased the likelihood that the stimulus measures in the US wouldn't be removed as quickly. And those stimulus measures are inflationary measures. So all the low interest rates, the bond buying program, all the things the U.S. government are doing to prop up the economy in the U.S., those are inflationary measures. And since the CPI numbers came out lower than expected, then the expectation is they won't pull back on those inflationary measures right away, maybe. And so up went gold rushing up. Now, I think that's a knee-jerk reaction because in general, we see inflation is not so high right now. The CPI numbers show that. And we also see this problem with China and the virus spreading at double the rate. The most recent headline, which could slow the economy in China. And so if there's a slowdown of the economy, then that's the opposite of inflation. So you might say, okay, let's take advantage of the knee-jerk reaction. We go after maybe a trade on gold that is, from a technical standpoint, it's opportunistic because gold just spiked up a ton today. Okay, kind of a knee-jerk reaction spike. So my technical analysis says, wow, there's a nice resistance level here. We see it hit right here and dropped. If we follow this price across from 1808, we see that's an old support level here that then broke and plunged down. So as you come up, this is a natural resistance level at this price level because it used to be support, 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 and then breakthrough and plunge. So as this came rushing back up, that's a natural spot where that found resistance. And now, fundamentally speaking, you say, okay, well, which way do I think gold should go? And the answer fundamentally would be, well, gold is an inflationary safe haven. And the question is, do I feel there's inflation, high inflation fears right now based on the fundamental news? And the fundamental news is one of the number one inflationary measures, CPI numbers out of the US show lower than expected inflation. So that would fundamentally make you think, okay, gold probably should drop off. And then you take a look and you say, China has COVID worries. That also then, if the economy is going to slow because of the Delta variant spreading so rapidly in China, then that also would be dampening inflation worries. And so you might say fundamentally, okay, I expect maybe gold to push down. And then technically you look at the chart and you say, wow, gold just went flying up to a resistance level. So you say, okay, this is an opportunistic spot to try and short gold based on the fundamentals and an opportunistic technical entry point. Now, I'm not risking so much. Gold can go up and break past today's high, and I could be out with less than a $10 per ounce risk. If gold drops down to today's low, and if I put my take profit even before today's low, above this support level down here, we see, if I draw a line, we see a support level right here. Support, up, support, up, support, up, support, up, and support one more time, up. So this support level down here around 1782 has held once, twice, 3 times, 4 times, okay? But it's been tested 4 times. This resistance level up here has shown to hold itself at least once. Okay, so if I'm going to take profit on what I could expect to be anti-inflationary dropping of gold, okay, if that's what I expect to have happen, I could take profit before it has to break this support level, okay? It doesn't even have to break the support, and I could have better than 2-to-1 profit compared to risk here. And really, it's more like 3-to-1 potential profit compared to what I'm risking. With the fundamental news maybe more on my side than against me. Okay, so this is the idea of fundamental analysis, looking at what's happening right now fundamentally, and then trying to make a decision, do I like the price on an instrument, and is the fundamental news on my side? And you, by the way, could buy on gold. I'm not telling you you should sell, but it's the idea, if you believe fundamentally in the news, in this case, the example is that the news is anti-inflationary, fears about the economy slowing because of increased corporate taxes maybe coming soon in the US, fears about the economy slowing because of maybe the Delta variant spreading in China, etc. And and CPI numbers being lower than expected. All of those would be anti-inflationary fundamental news points. Then if you agree with that, then maybe you're shorting oil in this instance. Fundamentally, it's supported, and then your stop loss is above the resistance level potentially here. Okay, and we'll see how that works out. By the way, the last webinar I did, and I've been out a few weeks, a combination of vacation and COVID quarantine, if you can believe that. I guess people could believe that. So I've been out a few weeks, but the last trades we took, we can see down here, we were talking about how we felt the cryptocurrencies could bounce back up. We looked at the technical analysis on it, and Ethereum certainly did. We see the profit that came in here on the simulated trades, and we also saw some other trades come through where we thought the indices could pull down some, which they did, and looks like we hit on a Canadian. We lost on one trade here. So those worked out nice. We had a nice turnout on those instruments. And by the way, we were looking at the same sort of thing, even though if it's a technical analysis webinar that we're focused on, we're still looking at the fundamentals. We're looking at both the technicals and the fundamentals and trying to line them up in a way that makes sense. Okay, let's take a look then at crude oil. A sure sign that there's economic fears, that it's not inflationary fear that's driving the movement, but economic fears, is when oil is dropping. Okay, if it was inflationary fears, gold goes up, right? Like we saw it spike up today. But if it's true inflationary fears and there's the feeling that, wow, the economy's roaring so much that prices are just going to keep rising, there's so much demand out there in the economy, then we would see oil go up with gold, right? But we see oil crash down today. And so why did oil crash down? There's a fear of a slowing economy, right? The CPI numbers were lower than expected. There's a fear of slowing of the economy because of the Delta variant spreading in China, etc., right? Slower economy means less demand for oil. And so we see the response that oil had is to shoot down. So the question is, would you want to buy on oil from this price? And if we're looking fundamentally, we would say probably not. The fundamentals tell us that oil should have dropped and that maybe oil could keep dropping. The fundamentals say there seems to be not a big inflationary situation right now in the economy, with the CPI numbers being lower, Delta variant spreading, fear about increased taxes, etc. Okay, so then what do? You say leave oil alone, or what are you looking for? And the answer might be you draw your support and resistance lines, and now I'm looking at 15-minute candles, and I say, okay, if oil comes back up to this old support level, say here, you see on the 15-minute candles, the wick hit here and bounced. Then the wick hit here and bounced. Then it came down and broke this little support level and plunged. So if oil bounces back up to this old support level, it should act as resistance. Okay, so someone's asking me if I'm using a real account MT4. It's a real MT4 account in terms of it's the actual platform, but it's a demo account that I'm working on for the webinars, and it's the same for the WebTrader platform I was on. Because of regulations and rules, I must be on a demo account when doing webinars. Good question. Okay, so when this bounces, if this bounces, I shouldn't say when, if this bounces back up to this resistance level, if you believe in the bigger picture, oil should be dropping, then that might be a spot that you would think about shorting oil as a more opportunistic spot rather than selling it from the low point, which has reached a bit of a support level here. Okay, we see the 15-minute candles, support, up, support, up, and now it came down to that same price and bounced. Okay, now it very well could break the support and keep on dropping, but if it bounces up to this price up here, to this resistance level, that's a more opportunistic price if you're thinking about shorting oil. Okay, so what kind of pending order would be able to sell from a higher price? Sell stop or sell limit? I know there's some confusion about that with some traders. And by the way, if you're using the AvaTrade platform, you don't have to pick sell stop or sell limit. All you have to do is tell it sell from, and I'll show you how that works. If I'm doing a pending order, and let's put crude oil, okay, crude oil, we've got the order window over here now. You see, if I'm doing a pending order, click on more options and make sure you've got execute when price hits showing. And all you have to do is choose sell or buy and put the price that you want it to execute at. You don't have to tell it whether it's a sell limit or a sell stop or a buy limit or a buy stop. The system does that for you. You just tell it the price you want it to buy or sell from. If it hits that price, it buys or sells from that price. Okay, so it's simplified here. All I have to do is put sell and put the price I want to sell from. On the MT4 platform, it's a little more complicated. In order to do a pending order, and yes, you all are correct that are typing sell limit, I have to switch to pending order. Then I have to pick the type of pending order. This is the extra step that you don't have to do in our AvaTrade Go mobile app or on the web trader. You have to tell it sell limit. And if you're not an experienced trader, you might not even know what that means. Buy stop, buy limit, sell limit. So the web trader simplifies that. Also makes it faster, even for experienced traders to set it up. So sell limit sells from a higher price. And so if I want to sell, if it reaches 17.46 or 17.45, then that's the price I put, not 17, 70, sorry. That'd be something if it dropped to 17. 70.45, put my stop loss price then would be something above that, say 17, or I'm sorry, 70, I got 17 stuck in my head. 70 point, let's say 75 or 85. Let's go 9.5. We'll go an even 50 cents. An even 50 cents to the stop loss, 50 cents per barrel. And the take profit back down to this support level. Go to 70 even. Okay, so place pending order. And there we are. So if this bounces up to my resistance level here that I mapped out, which a price level that we view as a resistance level, then it's going to hit my entry price on my sell limit and sell. And if it gets back down towards this support level here, we take profit. If it breaks the resistance and continues up, then it hits our limited risk 50 cents per barrel on the way up. Now, if I want a bigger trade, more long-term, I could look at 4-hour candles and say, you know what? I'll put my stop loss further away. I'll put it above 71, above the high up here, okay? Above the recent high in the past weeks. And I'll put my take profit at a bigger support level down here, 68 or so. Okay, that's a more long-term trade. And maybe that makes more sense to you as a trader. And now we've got a situation where we've got about double the potential profit compared to the risk, even triple the potential profit. Stop losses from this entry price here all the way up here, and take profit is much further down. So very interesting setup there fundamentally. It's supported as well, and in terms of the technical setup, it's an interesting option for a longer term move because we see a nice support level here. We're taking profit before that in this example, and a definite resistance level at this yearly high over here. Okay, so some examples. If you think more long term, there's going to be economic fears because of increased tax fears or because of the virus spreading fears, etc., then it could make sense to go after a longer term type move. And if that's the case, longer term, you might also say, you know what? I can go after a market move as well, if that's the case, right? I could go after a market move and say that I don't care if the price is perfect or not. If I feel that oil should drop more than rise, then I can just do a market move and sell on oil and put my stop loss up above the main resistance and put my take profit down before the main support down there. So that's up to you, you know, how aggressive you are, whether you wait for the exact entry point that you want, etc. And again, by all means, you could be buying on oil if you think that's the direction it should go. So we could take a look also at some cryptocurrencies. There was a request for the US 100. We could take a look at that real quick. And we're looking at, on 1 hour candles, a downward movement. On 30-minute candles, we see that there's been downward movement today. And so the question is, why is there downward movement? It's because of everything we've talked about fundamentally. Same reason oil dropped. It's the fears about the COVID virus spreading, fears about increased taxes in the US, the CPI numbers being lower than expected, etc. So a purely technical trader might take a shot at buying here. We see a support level, support, support, support. Fundamentally, it might make more sense to put a sell stop pending order below this support level. If it breaks the support, could be triggering a sell position here to go with the momentum. Okay, and I expect this support level easily could break. Okay, because that's the type of situation we're in right now, is there's economic fear that's hit the market. So opportunistic spot would be to sell from these high points up here if you believe the fundamentals are negative right now. Yeah, good question, Nawaz. The US Tech 100 is another name for the NASDAQ. The US 100, NASDAQ 100, etc. They're all the same thing. Okay, and we see this pushing down. I don't like going against the fundamental news. A purely technical trader would buy off this support level right now and put their stop loss just below the support. I believe the fundamental news could break this support level and we could see a further dropping of the NASDAQ here. So bigger picture, if we look at 1-day candles, we see the upper resistance is up here. If it breaks this support level here, it looks like we could see a drop at least to this price level down here around 15,135. Should be a couple hundred, 250 point drop potentially. Okay, so a pending order, when we look at the 15-minute candles, a pending order down here below this support level as a sell stop could make sense to go after more potential dropping on the NASDAQ, and for that matter, on any of the major indices around the world. If you see a support level, a sell stop below that support level has the potential to pay very well on the major indices. Okay, and we can look at maybe one of the major cryptocurrencies, and I think we'll call it an evening at that point. Let's see here. Here's Bitcoin. And we see the cryptocurrencies have been bullish over the past several days, and that has continued today so far. And we see a pullback in the past few hours, and it looks like a bounce occurring again in the short term. So very bullish movements lately. On the 1-day candles, we see support level on Bitcoin, support, 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 a climb and a big pullback, and it bounced off this support level again right here. It confirmed the support once and twice, and up it went. Okay, so a purely technical move, there aren't a lot of fundamentals with cryptocurrencies. So purely technical move here would be buying on Bitcoin, putting your stop loss below this support level on the 1-day candles, and you take profit just before the resistance level on the 1-day candles there. Okay, better potential profit compared to risk. Larger potential profit than what we're risking. The technical analysis is on your side there. The fundamentals, listen, there's been some negative fundamentals for the cryptocurrencies of late because of potential crackdowns in China and other places on the crypto industry. There's been some regulatory crackdowns, and that's the reason for this opportunistic entry point with Bitcoin dropping as much as it did in the past week or two. That's the reason for the opportunistic drop if you're looking to buy on any of the cryptocurrencies right now. And so we'll see if those fears about regulatory crackdowns are brushed off. You could easily see Bitcoin come back up to the high it was at last week or a couple weeks ago. And if not, we have a limited risk here type move. Okay. There's a question about rollovers. I can quickly show you where to find rollover information on our website. So if we go to our main website, we go to trading info, go to CFD rollovers, and you see any instrument traded on what we call futures contracts, then those contracts, in order for the instrument to be tradable past the end of that contract date, the futures contract needs to be rolled over to a new futures contract. So for example, our oil, natural gas, gasoline, a lot of these commodities you see listed here, the stock indices, etc., are traded on the futures. That makes them available 24 hours a day, 5 days a week, rather than only being available when the market is open in the US or in the European Union, etc. So you see that the contract rollover dates are listed. The exact date of the rollover, the current contract that it's being traded on, and the new contract that it'll be traded on. That's rolled over automatically. Your trades are rolled over automatically on those instruments, and there's nothing you need to do. The trade can keep running. You will see a rollover adjustment on your account if the price works against your open position with the new contract. Then you'll see a positive adjustment added to your account to make up for any negative effect that the new contract had on your open positions. And the opposite would be true if the rollover causes you to gain on your open positions, then you'd see a negative adjustment on your balance, so that the rollover itself has no net effect on your equity. Okay, if you need more detail on that, just talk to your account managers. They will be happy to assist you with more details about rollovers if you need some practice with understanding how that works. That's pretty much it for tonight. Have a look at some of the major indices, the commodities. Definitely, you should see a lot of movement on those instruments as they react to those big headlines that we looked at today. All right, everybody, good luck. And I'll be back at it this Friday with an earlier webinar, 11 a.m. UK time. All right, everybody, good luck with your trading. Bye for now.